Vincenzo's Gold Crypto Investing this September the 15th, 2025. Explosive gold and silver bullion mining stock update here and cryptocurrencies as we're on our way together to become asset millionaires by buying asset appreciating things in a chronic dollar depreciating inflationary world that we live in. And shit, it's not going to change. It's going to continue. So we buy the things that are going to appreciate as the dollar continues to lose value. And you can see silver bullion is on a magnificent squeeze. Gold bullion hit $4,200 an ounce for the first time ever, spot and futures. Silver bullion is at an all-time high, but it is not at it. Gold bullion has hit its adjusted inflation from 1980 high. It was like $3,600. Silver hit its nominal value for its high, but its inflation adjusted number would probably be over 100, right? But we're having a squeeze. And you say, Vincenzo, what's a squeeze? Well, the silver bullion market has been heavily manipulated on the paper scale, the paper side, for decades. Because you only have so many physical, real ounces of silver bullion, but you have an infinite amount of paper contracts that you can create. And they've been doing that to keep the price of silver down. Because it benefited different countries to keep the monetary and industrial metal down, right? Because if silver was skyrocketing, that would fire off signals that if the economies aren't booming around the world, something's going on. And those are being squeezed out now. Those paper contracts, those short positions are being squeezed out. Central banks and governments are buying up physical gold and silver bullion, drying up the physical market, squeezing out all the shorts that have been there. And those shorts are getting liquidated, those shorts, and it's a feedback. The same as I talk about Bitcoin. Every short that gets forced out, big money managers, banks, hedge funds that get bullied out, liquidated, sell at a massive loss, those that cover that, they become buys into the open market, right? And then the price gets forced up even higher and it's a feedback. And then more and more people get squeezed out, right? And I think we're squeezing up to $75. And that could happen as soon as the end of the year, as we went from $40 to $50 an ounce in silver in less than 8 weeks. And I think this is going to continue to accelerate. I think we're squeezing up to catch up to how much of an appreciation we've seen in the gold bullion market. And this is like I've been touting you for a couple of years now. This is a generational wealth transfer in the gold and silver and commodity markets, right? And where the real wealth is going to be transferred is going to be in the mining sector, because that's like leveraging your money, because they can go up 5 or 10x when silver or gold bullion will go up 1 or 2x. Like gold bullion's up 1x right now, and silver bullion's up 1.5 to 2x from its low right now. Maybe a little bit more from that $17 low before COVID. But the wealth is being transferred. You can see the mining stocks, and our biggest percentage that we're up, Kinross Gold is now at $27.15. We're up 422%. For all of you that have been accumulating and holding this position for over 5 years, we are up now. The 5-year hold is paid off. We are up 422%, and we are about $5 away at 32 and change from its all-time high, and by then we will be up 500 and something percent. Barrick Gold, we're almost up 100%. We bought it originally with our first shares with our tax money 2 years ago at $16.60 something cents a share. It's sitting at $34.29. Hecla Mining is already at 15. I thought it would do that next year. Pan America Silver is at 40. Dolly Varden, I think, is about to go up about $2 a share. First Majestic is at 14. We know it's going to 20 in the short term. Fortuna, if it gets above 10, it could go to 12 or 13 very quickly. B2 Gold, we're up 93% on this position, and this is our most shares that we own out of any company. We own 3,200 and change shares at $2.95, and it's sitting at $5.61. And we didn't buy them all yesterday. We've been buying them for 4 years. 4 years we've been buying them, and finally it's appreciating, and it's starting to accelerate and appreciate fast. $6, and I believe its all-time high is possible by the end of this year, which is just below $8, right? And this is very critical, and the reason we're talking about this is you guys want to become asset millionaires, but the only way to become an asset millionaire is to buy assets and to understand, most importantly, monetary and fiscal policy. You can see the US dollar was having a nice little rally, but it's dropped down. It's starting to give about half of those gains away that it had for the week. But the monetary and fiscal policy drives and dictates what equity markets to be in, long term, how to hold the store of your value, and how to increase your wealth, right? And cash does play a vital point, but when you're in cash, you have to be in something earning 3 to 5% at minimum, at least what inflation is every year. Because when you do get a certain amount of cash, you can live off the interest, right? If you had $3 million and you're getting 3%, you're earning $124,000 a year in income that you can spend every year without ever touching your principal, and it has zero risk, right? Except inflation, but you know, buy some gold bars. If you had 3 million, even at the price today, buy 100,000 or 200,000, even at the price today in gold bars, and in 20 years, there's your hedge, right? But it's very important to understand that. And if you look at the Bitcoin price, you can see something that we thought might happen across the board is we're having a big sell-off. Like we thought we would probably have to come back down and retest. We would have to come down and retest the drop points from last week's big dump, right? Last Friday's dump. Because the trade war tensions are not over. They're going to escalate during the Trump administration, but he seems to be trying to time it. Every time he has a big announcement, he seems to be trying to time it when the stock market is near all-time highs. So that way when it starts to go down 10 or 15 or 20% real quick, it's only going back to pre-pump of the recent all-time high levels before it broke out, right? It seems to be what he's trying to do. But what's going on in the crypto market is kind of something that I was talking about over the weekend after the big rally. Was, were we going to come back down and have to, was there something bigger brewing here? Or at the very minimum, were we going to have to come down and retest the drop points? And that's, you can see where the wick low is. We're coming down to a triple bottom now at the base of candles, sitting here at about 110,000, which is just above the 200-day moving average, which is a technical level, right? But you can see the drop point itself on the wick was at 107,000. And as you do know, we're attempting to break down out of a major 3.5 year plus rising channel pattern that we've been in ever since that mountain double top. And you can watch any video the last 6 months. I've been talking about it a year, 2 years, ever since that mountain double top. We've been in this rising channel with drastically decreasing volume, and the pattern itself is a bullish continuation. But when it's compounded with falling volume and a rising channel, eventually that signifies the pattern is going to eventually break down out of that. And this could be, again, attempting to break down out of this, and that's what we've been watching. If we zoom into the daily time frame, I just wanted to be able to show you that regional drop point there, and you can kind of see it on the daily. But that's something that we threatened to do back here in early March and April, but then we had the big rally at the end of fall and the summer. Now we're attempting to do it again. Either this is going to be another fake out and we're going to pump the next couple of months and get up near the $156,000, or we're going to continue figuring out what we're going to do. And if we do have a confirmed breakdown, your first underneath target is $95,000, right? And that's a major significant support level, because that's a pattern support. You would expect to bounce off of there. If we did come down to there, you would expect to bounce off of here, right? Now, the critical thing after that is, if we did in fact come down there, would that be it? Or would there be more, right? Because if there's more, the underneath would be coming all the way down to the next level, which is $79,000. And that $79,000 is a very critical level, because that's very close to where MicroStrategies would be at break even, which would start putting a lot of sweating on them. And I guarantee you they wouldn't be buying a ton of Bitcoin if they were at break even, right? Because they've been buying so much. Even though they bought their first Bitcoin at around 20,000, they bought so much the whole way up they keep bringing their average price back up, right? So that's very interesting and something to pay attention to, and that's what we're paying attention to in the short term. Can we hold that 200-day moving average where the wick held, or are we going to break down to the 95,000, or are we going to go to the opposite on where we're going to try to get back above the 50 and make a run back and get inside this 3.5-year pattern that we were in? The Ethereum price has had just as big as swings. You can see, come on, the Ethereum price right there. You can see we did have that nice bounce back up to the 50-day moving average, but like we were talking about yesterday on that 50-day moving average, we were saying if you can't get above it and you come back down to the neckline support, which is in red, it would likely not be able to hold, and it didn't. And I believe you're currently sitting on the 100-day moving average, and if you fail to hold this 100-day moving average, we're going to come down for a pattern retest of a swing low. And this time it won't be a wick, it'll be full candle bodies on the 35.32, which would be a pretty big fall, also coinciding with the top part of that green support and resistance box, right? So that's what we're looking at on the bearish end in the Ethereum price. The bullish end in the Ethereum price would be you get back on top of this neckline support, and then you have a nice pump and you get above the 50-day moving average, and then you take out the regional high here of 47.47 and make a run at that all-time high, right? If not, this could get pretty significant, and you could see a fall all the way down to $3,000. And remember, the Asset Millionaire Club, that's what we're here for, and that's, you can bell notification for free, subscribe to be part and to help spread the message and the word, share it to your social medias, comment, like it, to push us through the YouTube sphere. If you find any of this educational or informational, heeded any advice, although I am not a financial advisor, I would never tell you to buy or sell anything. But if you were able to make some smart investing decisions based off some of the education and information that I share with you, think about for $3.99 a month it starts at. It's as cheap as that to help support the channel to start, to keep these videos daily and for free, and help us expand. If I've been able to help you in any way, that's a way you can help me. If this information that I'm sharing with you, that I dive in and dig in and look at and learn more information on a daily basis to share with you to help grow the asset millionaires in this country, to help strengthen the retail, to help strengthen the average American financially, because that strengthens the overall country to get out of debt. Every individual that gets out of debt, that's one step closer to getting the country out of debt, because it's changing of a mindset, and we need to change the nation's mindset, because the nation right now is in a mindset of debt and a mindset of chronic spending on things we can't afford and we don't need, and zero sacrifice and delayed gratification is a thing of the past. It's I want now and I need it yesterday, paying with the money I do not have, right? And you can see the XLM price is coming back down to that critical 50-day moving average in the weekly, which coincides with the bottom part of this green support and resistance box down there at about 31.5, 32 cents. If you break that, we might come down to the 25 cents. And I'm debating on all of these if these wicks were a sign telling you where this price is going to slowly fizzle out to, because these are all new liquidity areas. That's a liquidity pull, and it's got a pull from it. So it's going to be very interesting with all these coins that have these big wick downs that were heavily with leverage. Are we going to actually come back and retest in full candle bodies? Don't know, but it's something that I'm obviously paying attention to for you. And in the short term, what you guys need to be watching out for is the 31 cents and the bottom part of this green support and resistance box, and the 50-day moving average in the weekly time frame. I think it's the weekly. Let me check that. There's the monthly. No, the monthly. What is that? What is 4 hourly? The monthly? No, I think it's the weekly. Yeah, it's the weekly. I got that confused. Sorry, it's not the monthly, it's the weekly. But the 50-day moving average in the weekly, that's the area that you need to stay on top of, right? You need to stay on top of that, because if you don't, you would be threatening to come all the way down to the 100-day moving average in the weekly time frame. Something that you wicked through, and you actually wicked all the way down and through the 200-day. So that's your critical short-term area. Can you hold this 31 cents? Can you stay on top of this 50-day in the weekly? Can you stay on top of the green support resistance box at the bottom of it that's right there? An area that we warned you all the way back through here in August, September, October, leading into October, June, July, August, September, that this 31 cents was something that could happen and we had to pay attention for. Now I'm telling you, if you don't hold this 50-day in the weekly, you're coming down to the 100-day in the weekly, right? If you want to avert that, you have to hold that 50 in the weekly and make a run back up closer towards that upper resistance, which is the locally short term, the 200-day at 34 cents. And then the 100-day above that and the 50-day above that at 36 cents and 37 cents respectively, right? So there's a lot of work to do. The XRP is the same thing, just at a different price level. And we've been warning you about this. We already had that circle, that 233, way back when the price was coming off that 366 high. We started showing you the 50-day and the weekly, right? And we were highlighting that if you broke down past the 255, which was just below the 200-day moving average sitting there at 263, that's where you would come down to. And on that flush, you wicked all the way through that. You wicked all the way through the 100-day moving average in the weekly. You wicked all the way through the 200-day moving average to $1. Finally, you fought and found the capitulation where all the buyers were at $1. That's where they were stacked heavy enough after all the forced liquidation to buy you down and to force all the longs out. The price had to come all the way down there. That's how many longs were in there on leverage, and that's why we don't leverage trade, right? But what I'm here to tell you today is, like we've been talking about since Friday, was this just a quick retail manipulation to flush you out before the boom, or was there something else here in the short to medium term? And right now in the immediate short term, if you break that 50-day in the weekly there at 233, you're coming all the way down to 177, right? And that would be your next major support level. If you do not want to do that, you have to hold and then start breaking above and get back above that 255. Start and march your way back north on the 263 and continue your way towards the 100-day moving average and the 50-day moving average, which is in 281 and about 284 respectively, from what it looks like to me, even though they're not updated because they were slightly downtrending. This is very critical time across the sphere and especially across the altcoins, because they are pumping and dumping, especially dumping much faster and at a bigger percentage than the big cap coins, right? So it's going to be very interesting to see if we're coming down to the liquidity pull, if this was something bigger than just a quick manipulated dump to wipe out all the leverage in there before we boom up, or was that just wiping out and we're just coming down to drop points before we make our next leg in the cycle. Like the channel, subscribe. This video went on way too long. Peace and love, the Rex Eyebrow, to my beautiful glowing audience that is the only reason this channel is what it is.